It's now time for the last technical session of the program, the topic being GST. Before we begin, I would like to introduce the chairman for this session, CA Akshay Hem Hiregange. Qualified as a chartered accountant in 2016, he is a partner of an audit and assistant wing at a multi-locational firm in India. He has experience of over 3 years in internal audit, compliance and assistance, and indirect taxes. And in the past 5 years, directing focus towards GST, including audit and consultancy matters. He has headed GST impact assessments of various industries such as automobile, software, manufacture, logistics. He has also undertaken GST training for corporate clients and has been invited by ICI as a speaker on GST on multiple occasions. He is also the co-author of Due Diligence under Indirect Tax booklet and is a member of a powerful study circle, ARTA. He is a regular contributor to GST articles and replies to CA Club India and Tax Guru. Thank you, sir, for taking time out of your schedule to be a part of this event.
Thank you.
A simple product or an item like lentil can be described as both a food item and a seed. It varies based on different cultures and how it is used by people. So how do businesses describe exactly what kind of raw material they require from various vendors? Or how does the government decide taxation rates on products that mean two different things? To answer this, we have Ms. Rachel Mendonca, who will highlight the importance of Hsn and SAC under GST. Rachel Mendonca is a CA Inter student and is currently undergoing her articleship at Messrs. Balakuraya and Associates Chartered Accountants, Balalbagh, Mangalore. She scored cent percentile in all core subjects in the 12th board exams at St. Agnes Pre-University College for the academic year 2014 to 2015. She was the school secretary at St. Teresa's High School, Mangalore for the academic year 2012-13 and was awarded Best Outgoing Student for the academic year. She was a member of the organizing committee of events at school and college level and had participated in various inter-school and intercollegiate competitions such as elocution, essay writing, and treasure hunt. E-commerce transactions look a bit complicated because many transactions are happening simultaneously. Thus, when a person is buying goods on Amazon, two transactions are happening simultaneously. The supplier is supplying goods through e-commerce portal and the e-commerce portal is supplying service to the supplier. Both the transactions are different transactions and subject to GST in its own nature. To make this a little more detailed and easier to understand, we have Ms. Dhatri KS, who will present GST on e-commerce transactions. Dhatri KS is a CA final student who is undergoing her articleship at Payanayak and Associates, Udpi. She completed her graduation from MGM College and secured second rank in Mangalore University BCom exams in May 2019. She had previously presented a paper reporting for uncertainty in going concern in CA Students Conference held at Udpi. It's a pleasure to have you with us, Rachel and Dhatri. Please give them a warm welcome. Over to you, Rachel.
Is the screen visible?
Yes, it's visible.
Okay. So my topic is importance of Hsn and SAC. I'll be covering this topic in 3 parts. Firstly, the origin of Hsn and SAC and its introduction into GST. Secondly, the structure of Hsn and SAC, which will help you to read a particular Hsn code. And lastly, the rules for interpretation, which will help you in identifying the appropriate Hsn for a particular product or service. Beginning with the 3 elements, that is levy, assessment, and collection are important in any taxation. And the Supreme Court, in its judgment, has held that if any one of these elements are absent, then the taxation does not hold good. The first element, levy, refers to whether a product or service is chargeable to tax. So, for example, taxation of alcohol under GST. We all know that alcoholic liquor is outside the purview of GST. The first element does not hold good here, so you need not go forward with assessment and collection. Another example could be a mobile phone. A mobile phone is chargeable to tax under GST. Therefore, you can move on to the second element, that is assessment. Assessment refers to determining the tax liability. And in doing so, you need to first determine the rate of tax that is applicable to the product or service. And you also need to determine whether the product or service is eligible for any exemptions. And here classification becomes very critical, and that's when Hsn comes into play. So going forward with the example of a mobile phone, in order to determine the tax liability, first you will need to classify whether your mobile phone in your hand is a bar phone, that is the keypad phone, or the smartphone. So assuming, let's classify this product as a bar phone. Once you have classified the product as a bar phone, in order to determine the tax liability, you need to check the rate of tax that is applicable on a bar phone, and you also need to check whether the bar phone is eligible for any exemptions. So this will help you assess the tax liability on your bar phone. Once you have assessed the tax liability, you can move forward to collection, collect the taxes, and deposit them with the government. Having understood why classification is so important, we'll come to today's topic, Hsn. Hsn stands for Harmonized System of Nomenclature. It is a 6-digit code that is used for the classification of goods. It was developed by World Customs Organization for the purpose of uniformity in classification throughout the world. Many countries have adopted this classification, including India. India has employed this 6-digit Hsn classification way before GST. It has employed it under the Customs Tariff Act as well as the Central Excise Tariff Act. Now, WCO gave us a 6-digit Hsn classification. But in India, in order to provide further classification, the Customs and Central Excise authorities went on to add 2 more digits, which is known as the Tariff Item Code. And this resulted in an 8-digit Hsn classification for goods in India. 6 digits provided by WCO plus 2 digits which are specific to India. On the other hand, SAC stands for Services Accounting Code. It is a 6-digit code that is used for the classification of services. And India has adopted a modified version of the United Nations Central Product Classification for this purpose. So to summarize this, Hsn stands for Harmonized System of Nomenclature and SAC for Services Accounting Code. Hsn is used for the classification of goods, whereas SAC is used for the classification of services. Hsn is an 8-digit code, 6 digits by WCO plus 2 digits specific to India, whereas SAC continues to be a 6-digit code. As we saw earlier, Customs, for the purpose of classification, had its own separate tariff act. And similar was the case in Central Excise with its Central Excise Tariff Act. GST does not have its own tariff act for the purpose of classification. And classification was introduced in GST through notifications, which have been listed here. So these notifications clearly state the rate of tax that is applicable to goods and the rate of tax that is applicable to services. It also gives you a list of goods and services that are eligible to exemptions under GST. Further, these notifications contain explanations which state that if you have any doubts or require any clarifications with respect to the classification of goods, you can refer the first schedule to the Customs Tariff Act. So if you have to refer to the first schedule to the Customs Tariff Act, you can go to the CBIC website, that is cbic.gov.in. Once you go to this website, you will see the customs tab over here. And under it, you have the tariff, which is updated as on 30th June 2021. So this is the entire schedule to the Customs Tariff Act, and you can refer to this in case of any doubts regarding classification of goods. You should not refer to this for the purpose of determining the rate of tax under GST. Similarly, if you have any doubts regarding classification of services, you can refer to the annexure that was introduced along with this rate notification, or you can also refer to the explanatory notes which have been hosted on the CBIC website. If you have to check for the annexure to this rate notification, you have to open the central tax rate notifications on the CBIC website. I have opened it right here. And if you see adjacent to this rate notification, you will find an annexure over here. So this annexure clearly states the SAC codes as well as the description of these services. So you can refer to this annexure, or the notification says that you can refer to the explanatory notes. These explanatory notes are hosted on the CBIC website. So again, going to the CBIC website, under the GST tab, you will find classification of services, and there are the explanatory notes which they have asked you to refer. So this explanatory note is similar to the annexure. It has the SAC code along with the description of the service. Additionally, it has given certain explanations regarding the services. So you can refer to these. Moving on to the second part, that is the structure of Hsn and SAC. So the Hsn structure consists of 21 sections, which have been divided into 99 chapters. The first 98 chapters, that is chapter 1 to chapter 98, are concerned with the classification of goods. And the last chapter, that is chapter 99, is concerned with the classification of services. These chapters are further classified into headings, and the headings are classified into subheadings. If you want to see the structure of the Hsn, you can go back to the Tariff Act that we opened here. You can see there are sections, and each section has multiple chapters under it. And in total, if you scroll to the end, you will notice that there are 21 sections and a total of 98 chapters for the classification of goods. You must make a note over here that each of these sections has a section note and a chapter has a chapter note. So the section notes will be mentioned in the first chapter under the section. So the section 1 notes will be mentioned in chapter 1, and section 2 notes will be mentioned in chapter 6. Similarly, each chapter has its own chapter notes. These section and chapter notes are of paramount significance because they give you specific inclusions in the section or chapter or make specific exclusions. They also give you meanings to words that are covered in these sections and chapters. So before you classify under a particular section or chapter, you need to make a note to read through these notes that are provided. Another point to note here is that the services SAC code are classified under the Hsn structure itself. So in common words, you can use the words Hsn to refer to both goods as well as services. Here is an example of an 8-digit Hsn code for in-shell cashew nuts. So do these digits signify anything at all? The first 2 digits, that is 08, represent the chapter number. The next 2 digits following the chapter, that is 01, refer to the heading. The next 2 digits, that is 31, refer to the subheading. And the last 2 digits, 00, refer to the tariff item. If you want to check the same on the Tariff Act, just make a note here. This Hsn comes under the 8th chapter. So going back to the Tariff Act over here, there is chapter 8 that you need to refer to. So make a point to read the section notes of this section. Once you open chapter 8, you will notice that there are chapter notes that you must read through before you actually start classifying under this chapter. As per our example, it was chapter 8 and the heading number was 01. That is the first heading to chapter 8. So under this chapter 8, you need to refer to the first heading. The first one here is 0801. So this is the heading that we need to refer to for our example. Moving forward, the next two digits represent the subheading, that is 31. So under the first heading of the chapter, you need to refer to the subheading 31. So you'll notice that subheading 31 appears here. And the last two digits, the tariff item was 00. And the entire thing over here is our example. But here it reads as in shell, as opposed to what I wrote here is in shell cashew nuts. So why have I added those description of the cashew nuts over there? In order to understand that, you need to first notice that each of these descriptions have some dashes before them. Some with a single dash, some with a double dash, and some with a triple dash. So what do these dashes signify? A single dash refers to the main heading. So in our example over here, under this heading, we have 3 single dashes. Coconuts, we have Brazil nuts, and we have cashew nuts. So these are the main headings. A double dash represents a subheading. It is a subclassification of the immediately preceding single dash. So for example, you can see here, we have 2 double dashes, that is in shell and shell. So these two become the subclassification of the immediately preceding single dash, that is cashew nuts. That is how I have written the description of this HSN as in shell cashew nuts, since it is a subclassification of cashew nuts. Lastly, a triple dash, which is a subheading of a subheading. So it is a subclassification of the immediately preceding double dash. As you can notice here, there are 3 triple dashes. These form the classification of the immediately preceding double dash, that is shell. The same can be seen here in a chart representation. So the entire heading is classified into 3 main headings, which is notified with a single dash. These main headings are further classified into sub-classifications, that is represented by a double dash. And some of these double dash subheadings are further classified into 3 dash subheadings. In our examples, we were at this in shell cashew nuts. Here's an example of a 6-digit SAC code for rental leasing services involving owned or leased residential property. Similar to reading an HSN, the first 2 digits of an SAC code represent the chapter number. If you had noticed earlier, all the services were covered under chapter 99. So the chapter number for all services will be the same, that is 99. The next 2 digits following the chapter are the heading, and the last 2 digits, the subheading. You can see this on the annexure to the rate notification that we had opened earlier. If you see here, it says chapter 99 for all services. And our heading was 72. So I'll just search over here. The heading 9972 reads real estate services. And our subheading was 11. So the entire SAC 997211 is here with its description. Having understood how to read the HSN and SAC, here is an 8-digit HSN code for dictionaries and encyclopedias. I would like for you all to just identify the digits of this HSN. What do these digits signify? The first 2 digits, 49, would be Okay, that's right. It is the chapter. The next two digits, 01, the heading, that's right. And the next two digits, 91, would be subheading, that's correct. And the last two digits, 00, would be the tariff item. Yeah, thank you so much. So having understood what each of these digits signify, a recent notification stated that the registered person has to mandatorily declare HSN while filing Form GSTR1. So if the turnover of the registered person exceeds 5 crore, he is required to mandatorily furnish 6 digits of HSN, irrespective of whether the supplies are made B2B or B2C. And where the turnover of the registered person is up to 5 crore, he has to mandatorily furnish 4 digits. A relaxation has been given to him that in case he is making supplies to B2C, he may not provide the HSN mandatorily in Form GSTR1. So having understood how to read an HSN, what do each of these digits signify? It is still possible that you may classify a product under one HSN and your colleague may classify it under another. Or there's a possibility from the point of view of an assessee, if you have to see, the assessee may classify it under one and the department may classify it under another. So in order to reduce this confusion to some degree, one can apply the rules for interpretation, which will help you in making the classification a little easier where you have some confusions. It covers 6 rules. The first rule is the general rule, which basically states that you should not classify on the basis of titles because they're given only for your reference. But classification must be done on the basis of headings, section and chapter notes, and the subsequent rules. So this rule in general says that in your Tariff Act, if you see each section has a description and each chapter has a description. So they're referring to these as the titles and telling you don't classify on the basis of these titles that you can see, but classify on the basis of headings, section and chapter notes. By headings, they mean to say the description that is corresponding the heading number. So every heading number has a description. So you must use this for the purpose of classification, as well as your section and chapter notes, and apply the subsequent rules as well. There's an example here. So if you were selling Christmas tree candles, one would logically classify them under 9505 heading, which reads as other articles for Christmas festivities. But if you read the notes to chapter 5, it specifically excludes Christmas tree candles. So in that case, as per rule 1, you have to adhere to the chapter notes, and therefore you will be required to classify this product under the heading which reads candles, tapers, and the like. Moving on to rule 2. Rule 2 is classified into 2 parts. Rule 2A is concerned with incomplete and unfinished articles, and Rule 2B with mixtures and combinations. Rule 2A, in simple words, if I have to say, in the case of incomplete or unfinished articles, for example, a railway coach in which seats have not been installed yet. So it is an incomplete form of a railway coach which is completed. So Rule 2A states that since a railway coach without seats is still having the essential character of a railway coach, you must classify this incomplete railway coach as a railway coach. Similarly, in the case of unassembled or disassembled article, for example, if you purchase a bookshelf from IKEA, IKEA does not send you the entire bookshelf in the assembled form. They'll put the parts together, package it, and send it to you, which you have to assemble yourself. So in that case, Rule 2A says that although the bookshelf is in the disassembled form, it still has the essential character of a bookshelf, and therefore you must classify it under the heading of a bookshelf. Here are a few more examples. A car missing its wheels has the essential character of a car. Therefore, you will classify it as a car. Similarly, when you go to purchase a fan, they'll not give you the entire fan in its assembled form. They'll give you all of the parts like motors, blades, and mounts in a box, which you need to assemble and mount it. So although you buy only the parts in a box, it still has the essential character of a fan. And therefore, as per Rule 2A, you must classify this as a fan. Rule 2B is concerned with mixtures and combinations. For mixtures and combinations, you can take an example of a gold jewelry set with diamonds. So the jewelry set has gold, it also has diamonds. So this product can be classified under two headings, the heading of gold as well as the heading of diamonds. Similarly, goods of different materials, let's take an example of a smartphone here. It is a mobile phone, it has a camera, a calculator, a watch. So it has multiple components in the same product. And Rule 2A says that where you find certain products which have multiple components and they're capable of being classified under multiple headings, in that case, you must classify on the basis of the next rule, that is Rule 3. Rule 3 is classified into three sub-rules, 3A, 3B, and 3C. These three rules must be applied in their numerical order by elimination. That is to say, you first apply Rule 3A. If Rule 3A, you cannot obtain classification as per Rule 3A, you move on to the next rule, that is Rule 3B. So you're eliminating Rule 3A. Similarly, if Rule 3B fails for you, you need to eliminate 3B and move on to Rule 3C. So Rule 3A in short states that you must classify on the basis of specific description over general description. So our example of gold jewelry set with diamonds, we said that it has two components, gold and diamonds. So it can be classified under the heading of gold or under the heading of diamonds. But if you see under the heading 7113, there is a specific description to our product, the example that we have taken, that is articles of gold set with diamonds. So this HSN is clearly giving you a specific description for the product at hand. Therefore, as per Rule 3A, you will not classify it as gold or as diamonds, but you will classify it with the HSN, which most clearly is giving you a specific description. Now, if you see Rule 3A, it makes an exclusion. If you have a product with multiple components and you cannot find a specific description, and all the components in your product are equally specific, that is, one is not more than the other, they all are very much equal. So in that case, Rule 3A says, move on to the next rule, that is Rule 3B. And as per Rule 3B, you are required to classify such products on the basis of the component which gives the product its essential character. Since everyone is equal, you will pick the component which gives the entire product its essential character. So our example of a smartphone having multiple things in it, like a camera, calculator, a watch. So taking an example of a smartphone with a high resolution camera. The camera is so much good that it can equal a digital camera. So in that case, what do you do? In that case, as per Rule 3B, you will classify the smartphone on the basis of the component which gives the smartphone its essential character. And the essential character of a smartphone is a mobile phone. Therefore, you will classify a smartphone under the heading of a mobile phone. If by any chance the product in your hand is not capable of being classified under Rule 3A or under Rule 3B, you're required to move on to Rule 3C. And Rule 3C says that you need to find the headings of each of the components of your product, list them down, and find the heading which is last in the numerical order. That is how you're supposed to classify under this rule. So here's an example, a gift set which includes socks and ties. You're not able to classify it as per Rule 3A because there is no specific description. They're equally specific over here. So you move on to Rule 3B. Rule 3B tells you classify as per essential character. But both of these are equally essential in a gift set. So what do? Rule 3C says list the headings. And as you see, the headings are listed here. And you need to now classify on the basis of the heading, which comes last in the numerical order. So in this case, it would be heading 6117, which is for ties. So classify it with the heading of ties. The entire gift box will be classified with the heading of ties. If by any chance you were not able to classify under Rule 1, Rule 2, as well as Rule 3, then you move on to Rule 4, which is the akin rule. And it says that if you could not find classification in any of the previous rules, you must classify the product under the heading of the product which closely relates to this product. This is usually applicable to new products. For example, if a digital pen was invented just today, so naturally, it's true that there won't be any HSN for a digital pen in the list. In that case, you will apply Rule 4 and classify the digital pen with a product that it has a close relation with. Coming to Rule 5, it is again classified into two parts. Rule 5A is concerned with cases, boxes, and similar containers. Here you can take examples of camera cases, musical instrument cases. So a camera case has been specifically manufactured to fit the camera. It is going to be used over a long period of time, and it is sold with the camera. So the camera case satisfies all the conditions of Rule 5A. So Rule 5A says you need to classify this camera case as a camera, that is, as the product with which it is being sold. Rule 5B, on the other hand, is concerned with packing materials and containers. And taking an example of the box in which you receive your mobile phone when you go to purchase a new phone. So that box is essentially used as a packing material for the phone. It is a one-time use. You're not going to use it again. So Rule 5B says that in such cases, you need to classify this box as the mobile phone, as the product that you're selling it with. Coming to the last rule, that is Rule 6. Rule 6 only states that in case of classification of goods at the subheading level, you need to take in mind the terms of the subheadings, the section and chapter notes, as well as the preceding 5 rules. And it says that when you're making comparison between subheadings, make the comparison at the same level. So in this chart, if you see, it's just trying to tell you that if you're making a comparison between these subheadings, a 2- subheading must be compared with another 2- subheading only, or a 3- subheading must be compared with another 3- subheading only. You cannot compare a 2- subheading with another 3- subheading. Here's a summary of all the rules. Rule 1 was the general rule, which said that you should not classify on the basis of title, but classify on the basis of headings, the section and chapter notes, and the subsequent rules. Rule 2A, which was concerned with incomplete and unfinished articles, as well as unassembled or disassembled articles, said that you need to classify those as if they were finished products, if they have the essential character of the finished products. Rule 2B was concerned with mixtures and combinations and only laid a basis and said if your product has multiple components which are classifiable under multiple headings, then classification has to be undertaken as per the next rule, that is Rule 3. Rule 3 has 3 sub-rules, and Rule 3 states that you need to follow the sub-rules in the numerical order by elimination. So Rule 3A says that you need to classify on the basis of specific description over general description. And if Rule 3, you cannot classify as per Rule 3A, you move on to the next rule, that is Rule 3B, and classify the product on the basis of the heading giving the product its most essential character. And if you are still not able to classify as per Rule 3B, you move on to Rule 3C, which says that you classify on the basis of the heading which occurs last in the numerical order. And Rule 4 says that if you are not able to classify as per Rule 1, Rule 2, as well as Rule 3, then you come to classification as per Rule 4 and classify the product along with the product to which it closely relates. Rule 5 was specifically for containers, where a container was made specifically for a product for a long time use and is sold with the product. You will classify it with the product being sold under Rule 5A. And in case of packing materials, which are specifically made for packing the product being sold and are going to be used only for one time, classification is required to be done on the basis of the product that is being sold as per Rule 5B. And the last rule, Rule 6, only says that when you're making comparison between subheadings, make the comparison at the same level. Having understood all the rules for interpretation, here's a question. I would like for you all to determine the appropriate HSN for the charger that you get in the mobile box. So when you go to purchase a mobile phone, the box contains a phone and a charger in majority of the cases. So under what HSN or heading will you classify this charger? Will you classify it as a mobile phone or will you classify it as a charger? Okay, there's answer saying mobile phone. Yeah, normally we would apply the concept of composite supply and treat the charger, treat mobile phone as a principal supply. Therefore, consider the charger under the heading of the mobile phone. This situation was actually a dispute under VAT because naturally all the sellers classified the charger as a mobile phone and charged it to tax at the rate of the mobile phone. Under VAT, mobile phone was chargeable to tax at a lower rate of tax as compared to the charger. Eventually, after multiple cases, the Supreme Court held that the charger is an accessory and it does not amount to a composite supply. Therefore, the charger will attract the higher rate of tax, that is the rate of tax that is applicable to a charger. And you cannot classify the charger with the mobile phone. So in response to this, the sellers were very aggrieved and further representations have been made. So this only shows that you might try very hard and apply the rules of interpretation perfectly and arrive at an HSN. But there are still situations or cases where an alternate opinion is possible. This has been my presentation. Thank you so much.
Questions, if any, will now be addressed by the speaker. You can post your questions in the chat box. I now request the next speaker, Ms. Datri, to take over.
Is my screen visible? Is my screen visible?
Yes. Visible to me.
Yeah. So good evening, one and all. My name is Dhatri, and today I'll be speaking on the topic GST on e-commerce transaction. E-commerce transaction is something which requires no introduction at all. It has grown tremendously with more and more number of users buying as well as selling things online. Especially during this time of pandemic, it has become a blessing in disguise. You can have whatever you want with just a click. Since these kind of transactions are increasing, even government has introduced certain provisions through GST which were not there in pre-GST laws. when you look at these transactions from a buyer point of view, it might seem very simple and convenient. But if you look at it from an accounting or taxation point of view, it is a lot more complicated because there are multiple transactions happening at the same time. For example, when you order something online, say Amazon, there will be one transaction that is happening between you, the buyer, and Amazon, which is the electronic commerce operator, and the seller. Here, there will be three parties. Buyer, that is you, are placing order with Amazon, who will in turn pass the order on to the seller. And seller will supply these goods or services to buyer through the electronic commerce operator, that is Amazon. And usually the consideration for the same will also be collected by the Amazon, and Amazon in turn will remit the same to seller. This is how an e-commerce transaction happens. So this part of this contains three parties and one single transaction. Basically, this is nothing but Amazon is acting as a mediator between buyer and seller. So this is one transaction which you can see. But there is one more transaction that is happening at the back end. That is a transaction between Amazon and the seller. Here, Amazon is providing a marketplace for the goods or services of seller, which is also a taxable supply. Hence, both of these transactions should be charged to tax under GST. And today we'll be seeing various provisions which pertains to these kind of transactions. Before moving any further, we'll see some of the important definitions which is necessary to understand the provisions of the Act. First is, what is e-commerce? E-commerce is nothing but supply of goods or services, which includes digital products, but over a digital network or internet. When you supply something online, it is known as e-commerce, in simple words to say. And who is an e-commerce operator? E-commerce operator is a person who owns, operates, or manages a platform in which e-commerce happens. So that is the definition of e-commerce operator. Examples are Amazon, Flipkart, etc. There are many examples in these days. And the general meaning of digital product is that any product which does not have any kind of physical existence. Examples may be ebook. So this was some of the relevant definitions. Next, we'll move on to the next concept, that is various business model under e-commerce. First model is business to business. This is the type of business model in which electronic supply of goods or services happen between two business entities or two companies. Some of the examples for this type of business models are IndiaMart or Walmart. Second type is business to consumer. This is one of the most famous type of business model in which electronic supply of goods or services happen between business and an end consumer. When you order something online, it is an example for business to consumer. Examples are Amazon, Flipkart, etc. Next is consumer to consumer business model. In this type, electronic transfer of goods or services happen between two consumers, that is between two individuals who occasionally take up selling or buying. Examples are Quicker, OLX, where you can sell as well as buy things online. Next model is consumer to business. Sometimes individuals provide their services to entities, maybe like consultancy services. So this is a type of business model in which an individual person is giving his service to a business entity. So these are the various type of business models under e-commerce transaction. Now, when I say e-commerce transaction, basically there are two types. One is person selling goods on his own, and the second thing is through another person. So that is, for example, Titan is there. If Titan sells its watches on its own website, that is one type of e-commerce transaction. And if Titan sells watches through Amazon, then it is second type of e-commerce transaction. So we'll be covering provisions which apply to the second type of transactions today. So our next concept is place of supply. We all know that GST is a destination-based tax. The goods or services will be taxed at the place where they are consumed. So that means that the state in which they are consumed have the right to collect tax. So this makes the concept of place of supply very crucial in GST, because all the provisions of GST will revolve around this concept. And if you determine place of supply wrongly, then it will lead to wrong collection of taxes, and which will create problems while taking input tax credits. Now we'll see how this place of supply applies. When you order something online for yourself, that is, shipping address is same as billing address. In such cases, place of supply will be where the goods are delivered to the buyer. That is, place of supply will be this billing address or shipping address, because both of these are same in this case. Next is the case where you are ordering something online for someone else. That is, shipping address is different from billing address. In such cases, place of supply will be the billing address. Now we'll see the concept of place of supply with the help of some examples. First example is Mr. Suresh of Mysore, Karnataka orders a mobile phone from Amazon. The seller Happy Mobiles is a registered dealer in Hubli, Karnataka. So here in this case, Mr. Suresh is ordering mobile phone for himself. So billing address is as same as shipping address. So the place where they are delivered will be considered as place of supply. Here Mr. Suresh is in Mysuru, Karnataka. Hence place of supply will be Mysuru. And it is important to note that Happy Mobile is the registered dealer in Hubli, Karnataka. Since both of the places are in Karnataka, it is an intra-state transaction and Cgst and Sgst will be levied. We'll move on to our next example. A Limited of Mysuru, Karnataka orders a mobile phone from Amazon to be delivered to B Limited in Lucknow, UP. Measures all mobile online seller registered in Gujarat, processes the order and sends the mobile phone accordingly, and A Limited is billed. Here in this case, A Limited is ordering a phone for B Limited. That means billing address is different from shipping address. When it is the case, the place of supply should be the billing address itself. So the place of supply will be Karnataka. Since the seller is located in Gujarat, it is an interstate transaction and IGST will be levied. And if you notice, both A Limited and B Limited are considered as registered entities in this case. Hence, there is assumed to be a deemed supply between A Limited and B Limited. It is always, encouraged to issue an invoice from A Limited to B Limited. Next, we'll move on to the next example. Mrs. Sharma Chartered Accountants of Mumbai, Maharashtra orders a book on finance from Amazon. All Books Limited, Gujarat processes and sends the book accordingly. Here, Mrs. Sharma Chartered Accountants are from Mumbai and Maharashtra, and so the place of supply will be Mumbai, Maharashtra. Since the seller is registered in Gujarat, it is considered to be an interstate transaction and IGST will be levied accordingly. So this was about the rules of place of supply and the various business models under e-commerce. Now, there are three specific categories in Cgst Act which speaks about e-commerce transactions. That is Section 9, Subsection 5 of the Cgst Act 2017. Next is Section 52 of the Cgst Act 2017. And third is Order Services, which includes Section 14 of the IGST Act 2017. So we'll be seeing these sections one by one today. First, we'll go on to Section 9, Subsection 5 of the Cgst Act 2017. This section says that the government may, on recommendation of the Council, by notification, specify transactions on which tax shall be paid by the e-commerce operator if such services are provided through it, and all of the provisions of this Act shall be applicable to him as if he was a supplier. So in simple words to say, this is a charging section under GST for some of the notified services. It says that in case of certain services, instead of seller, e-commerce operator is liable to pay taxes. Now here, when I say pay taxes, it is not like RC. Here, e-commerce operator is liable to pay taxes, file returns, and comply with the provisions of this Act as if he himself was the supplier of those services. Now, what are the services that is specified by government in this regard? So this government has specified three transactions, that is service by way of passenger transport services in motor cabs, radio taxis, etc. Best example is Ola and Uber, where if you own a vehicle, you can provide the service of transportation of passengers. And in this case, Ola or Uber is liable to pay taxes instead of the actual owner of the vehicle. Next is accommodation services. So service by way of providing accommodation services in hotel rooms, guest rooms, inns, etc. are covered under Section 9, Subsection 5, if and only if such supplier are not liable to get themselves registered under Section 22, Subsection 1 of the Cgst Act 2017. Some of the examples for accommodation services are Oyo rooms, where Oyo room is liable to pay taxes. Next, third specified service is housekeeping service. Housekeeping service by way of providing housekeeping services like plumbing, carpeting, etc. are covered under Section 9, Subsection 5. Again, if and only if supplier is not liable to get himself registered under the Section 22, Subsection 1 of the Cgst Act 2017. Now, as I said, for accommodation services and housekeeping services, supplier, it is covered under Section 9, Subsection 5. If and only if supplier is not liable to get himself registered under Section 22, Subsection 1 of the Cgst Act. So, Section 22, Subsection 1 speaks about the cases in which supplier is required to obtain registration. It says that if the turnover of the supplier exceeds the following threshold limits, that is, in case of goods 40 lakh and in case of services 20 lakh. And in case of special category states, the turnover limit is 10 lakh. If it exceeds these amounts, then he is required to obtain registration. So if he is required to obtain registration, then Section 9, Subsection 5 is not applicable, only in case of accommodation services and housekeeping services. Now, it is important to note that these e-commerce operators might not have any physical presence in India. In such cases, also Section 9, Subsection 5 is applicable. But he may have some representative in India who will be charged, who will be liable to pay taxes and file return on their behalf. If they do not have any representative in India, then he is required to appoint a representative who will pay taxes and represent him on this behalf. Now we'll see some of the example for this section. First is Mr. A owns a car. He registers himself with Ola and provides services for transportation of passengers in his own cab. Here in this case, Mr. A is providing the service of transportation of passengers. So in this case, Section 9, Subsection 5 becomes applicable and Ola is liable to pay taxes. Next, we'll see one more example. Mr. A owns 25 cars on which he is earning 30 lakh rupees per annum. Whether Section 9, Subsection 5 is applicable in this case? The answer is yes, because the limit of turnover, that is Section 22, Subsection 1, comes into picture only in case of accommodation services and housekeeping services. In case of transportation services, Ola itself is liable to pay taxes. We'll move on to one more example. X Limited provides accommodation services through an electronic commerce operator. Who is liable to pay taxes? In case of accommodation services, it depends upon XYZ Limited. If XYZ Limited is liable to get itself registered under Section 22, Subsection 1 of the Act, then Section 9, Subsection 5 is not applicable. So this was about Section 9, Subsection 5 of the Cgst Act 2017. Now we'll move on to Section 52 of the Cgst Act 2017. This section speaks about TCS under GST. It says that electronic commerce operator is liable to get himself registered, liable to collect tax at the rate of 1% on net value of taxable supplies made through it by another supplier, and consideration is also collected by him. Now, this is the meaning of Section 52. Now, we'll break down this meaning and understand the concept. First point is that electronic commerce operator is liable to collect tax on supplies made through it by another supplier. So, to be considered under Section 52, it is important that the person is supplying goods or services through electronic commerce operator by another supplier. As said earlier, if I take the example of Titan, if Titan is selling watches on its own website, then this section is not applicable. However, if it is selling goods on through Amazon, then Amazon is liable to collect taxes. Next is, consideration should also be collected by the electronic commerce operator. Here, when an electronic commerce transaction happens between three parties, there will be two cases. Usually, consideration will be collected by the electronic commerce operator, and then he will remit the consideration to seller after deducting his commission. But in some cases, what might happen is buyer will directly pay the amount to seller. In such cases, Section 52 is not applicable, and he need not collect any tax on such supply. Next is, TCS is not applicable in respect of transactions specified under Section 9, Subsection 5. So Section 9, Subsection 5 and Section 52 are mutually exclusive. So if a service is specified under Section 9, Subsection 5, then this section is not applicable. And Section 52 specifically says that tax needs to be collected at the rate of 1% on net value of taxable supplies made through ECO. Hence, collecting tax on exempt supply is not applicable in this case. As said earlier, Section 52 speaks about collecting tax at the rate of 1% on net value of taxable supplies. What is net value of taxable supplies? Net value of taxable supplies is nothing but aggregate value of taxable supplies that is made through electronic commerce operator as reduced by the value of returns received during month. And in computing this net value of taxable supplies, we should exclude those supplies to which Section 9 subsection 5 is applicable. We'll see this concept of net value of taxable supplies with the help of an example. Suppose a certain product is sold for rupees 1,120 rupees, which is inclusive of GST. So if we exclude GST, the amount would so the selling price would be 1,000 rupees. So in such 1% of TCS should be collected. So TCS would amount to rupees 10. So we'll move on to one more example. XYZ Limited is an electronic commerce operator in India, and the value of taxable supplies made during the month of September is 10 lakh rupees, which includes transactions specified under Section 9 subsection 5 of rupees 1.5 lakh. And during September, it has received returns of worth rupees 50,000. And in addition to this 10 lakh, it has also made some exempt supplies. So in this case, we have to compute the net value of taxable supplies. So as said earlier, the total taxable supply made during the month of September is 10 lakh rupees. From this, we have to exclude transactions specified under Section 9 subsection 5, that is 1.5 lakh rupees. And we have to reduce the value of supplies returned received during the month, that is 50,000 rupees in this case. So net value of taxable supplies would amount to 8 lakh rupees. So tax should be collected at the rate of 1% of net value of taxable supplies. So TCS would amount to rupees 8,000 rupees. So this was about net value of taxable supply. Now we'll see some of the miscellaneous provisions or things that come under Section 52. First is deposit of tax. After collecting tax, it is obvious that electronic commerce operator is required to deposit the same with government. And the time limit which is prescribed for depositing the tax is 10 days after the end of the month. That is, if the supplier is making a supply in the month of July, then the tax needs to be deposited within 10th of August. So this is the time limit set for deposit of tax. Next is monthly and annual statement. After depositing tax, the electronic commerce operator is required to file certain returns with government. First is, he is required to file a monthly return in Form GSTR 8. This needs to be filed within 10 days after the end of month. That is, if he has made supplies during the month of July, then it needs to be filed within 10th of August. This GSTR 8 will contain details about the value of supplies made during the month. It will also contain details regarding the value of returns received during the month. In addition to this monthly statement, he is also required to file an annual statement, that is in GSTR 9B. So this GSTR 9B should be filed within 31st December after the end of financial year. However, the format for the same GSTR 9B is not out yet. Next, while filing this monthly return and annual return, it may so happen that electronic commerce operator might omit some items, or he might provide some incorrect particulars. So in such cases, an option is given to him to rectify those omissions and incorrect particulars. So, but they have provided a time limit within which such rectification should be made. So the time limit for the same is actual date for filing annual return or 30th September after the end of financial year. So whichever is earlier. So before this time limit, the electronic commerce operator can rectify the omission as well as correct the incorrect particular which is already provided. And while doing so, he is required to pay taxes along with interest. Next is matching of statement of electronic commerce operator and supplier. So one of the main reasons for bringing this section into picture was to keep track of transactions that happen electronically. So to do that, it is obvious that we have to compare the returns filed by electronic commerce operator, that is GST 8, and the monthly statements of the seller. So these two statements will be compared, and if any discrepancy is found, then such discrepancy will be communicated to both the parties, and they have to rectify it. Suppose if they fail to rectify same, then in such cases, whatever output tax liability that is extra will be added to the output tax liability of the supplier, and he is required to pay tax in the succeeding month along with interest. However, this concept of matching is not active yet. Now, as said earlier, after whatever tax that electronic commerce operator is depositing is nothing but the output tax liability of the supplier. So he can take the credit of same, because this TCS collected will be reflected in his electronic cash ledger. Now, what is the procedure for taking the credit of such TCS? We'll see today. We'll see now. So after logging into his account, he is required to go to services, returns, and return dashboard. After going to returns dashboard, he is required to select the period for Cgst Act 3B. And after going there, he is required to select TDS or TCS receipt by clicking on the button Prepare Online. So after clicking on the button Prepare Online, every entry of TDS and TCS will be reflected there. And he is required to accept or reject each record depending upon his need. Once he accepts a record, it gets reflected in his electronic cash ledger. So this is how he can take credit of TCS under GST, which is deposited by the electronic commerce operator. So this was about TCS under GST and section 52. Now the next part is Online Information Database Access and Retrieval Services, that is OIDA services. So this is a category of services in which both supply as well as receipt of service happens online, and the buyer of the service will have no physical interface with the seller. The best example for this kind of service is downloading an ebook. As explained, the place of supply rules earlier, for any supply to be taxable in India, it must be consumed in India. So if any service is consumed in India, it becomes taxable. So when both supplier of OIDA services as well as receiver of OIDA services in India, the place of supply shall be the place of the recipient, and it will be charged to GST and in India. What happens if the supplier of OIDA services is outside India? Since the recipient is in India, it should be charged to tax under GST, because place of supply is taxable territory, that is India. So if that is the case, then who is responsible to pay taxes? If both supplier as well as receiver of OIDA services is in India, then no issues, supplier will pay tax as usual. If supplier is in non-taxable territory and the recipient is in taxable territory, and if such recipient is a registered person, then recipient is liable to pay taxes under reverse charge mechanism. So reverse charge mechanism will be evoked here, and they will pay taxes. So far, so good. But what happens if the recipient is an unregistered person? So in such cases, Section 14 of the Cgst Act 2017 comes into picture. And in such cases, supplier of OIDA services who is located outside India is liable to pay taxes. So as he is liable to pay taxes, it is obvious that he is required to obtain registration. So for such persons, government has introduced a simplified scheme of registration. That is, he can obtain a single registration by applying in form GST RAG10. So he can obtain a single registration in simplified form. And as said, same for section 9. If he has any representative in India, then such representative will get registered and will pay the taxes. If he does not have any representative in India, then he may appoint a representative who will get himself registered and pay taxes on his behalf. In addition to registering and paying taxes, he is also required to file a return. And the return is to be filed in form GSTR 5A. And this GSTR 5A needs to be filed on or before 20th of the succeeding month. That is, if an OIDA service is provided in the month of July, then within 20th of August, this GSTR 5A needs to be filed. So this was about OIDA services and Section 14 of the Cgst Act 2017. We'll see some of the examples for it now. Mr. A, an MBA graduate, subscribes premium membership of LinkedIn for 1,500 per year. What will be the GST consequence? Since this is an OIDA services and Mr. Ganesh, who is the recipient of service, is an unregistered person, Section 14 comes into picture and LinkedIn itself will pay taxes. Next, we'll see one more example. Reliance Industries opens a profile on LinkedIn in order to recruit employees. And in this case, Reliance Industries is a registered entity and LinkedIn is located outside India. In such cases, RCM is applicable and Reliance Industries is required to pay under reverse charge mechanism. So this was about OIDA services and Section 14 of the Cgst Act. Now we'll move on to certain provisions of registration which is applicable in light of e-commerce transactions. First is registration of electronic commerce operator. We all know that electronic commerce operator is required to obtain registration compulsorily under Section 24. That is, irrespective of his turnover, he is required to obtain registration under GST. Next is registration for supplier who are providing goods or services through these kind of electronic commerce operator. So Act says that those suppliers who are providing goods or services through electronic commerce operator who is required to collect tax under Section 52 is required to obtain compulsory registration irrespective of their turnover limit. That means supplier of goods or services through ECO is required to obtain registration irrespective of their turnover limit. However, government by notification has provided that if a service provider is providing services through electronic commerce operator, then they can obtain registration only if their turnover exceeds the threshold limit. So an option is being given to service providers. However, the specific notification is not applicable to those services which are covered under Section 9 subsection 5, that is accommodation services, housekeeping services, and transportation of passenger services. Next is state-wise registration. As I said earlier, electronic commerce operator is required to obtain compulsory registration. Now, in which states he is required to obtain registration? The answer is he is required to obtain registration in all those states in which his suppliers are located. Suppose let's take the example of Amazon. So let's say Amazon have an head office in Delhi, but it is having suppliers in various states, Karnataka, Tamil Nadu, Gujarat, everywhere it is having suppliers. So it is required to obtain registration in all those states. However, while obtaining such registration, it is not required to have a place of business in all these states. It can obtain registration in all these states with its head office, that is from Delhi itself. And after providing certain necessary documents, if proper officer is, the proper officer will grant certificate of registration in form REG 06. And if he finds out that electronic commerce operator is no longer liable to collect TCS, they might cancel the registration in GST REG 08. So this was the provisions of registrations which was applicable in light of e-commerce transactions. When we see all these provisions for e-commerce transactions, we can see that there are various compliances under GST for these kind of e-commerce transaction. But yet it provides a very good marketplace for those suppliers who wants to go online and sell their products to various customers. So I can say that it provides a good marketplace, and all these transactions are brought into the ambit of GST in order to reduce ambiguity and increase transparency, which is much needed, and it also creates a good source of revenue for government. So that was about GST on e-commerce transactions. Thank you for the opportunity.
Thank you, Rachel. I now request the chairman, CA Akshay, to give his concluding remarks on the session.
Thank you. First of all, I would like to congratulate Rachel and Dhatri on giving a really great presentation. Some personal remarks with respect to this. For Rachel, the PPT was very innovative. Your English and your vocabulary which you have used was very clear and very simple. professional approach, and overall I feel great presentation.
Thank you so much,
Dhatri,
sir.
thank you. Dhatri, your PPT again was very peppy and nice, and it is more audience driven, very well deliberated, and even with this time pressure, you did not hurry up or lose your control. So very well presented. With respect to the topics, first coming to the HSN and importance of classification. There's one case law which was recently deliberated, which was the Mother Superior's Adoration Convent with respect to Kerala Supreme Court, which was in response to the residential accommodation and the exemption in relation to the hostels which are attached to the educational institutions. So here they had given that the exemption has to be read strictly, and the Dilip Kumar case could be should be considered, and that interpretation must be taken. But in this wrong notion of this exemption, which has to be read very strictly and absolutely, was struck down, and they said that it should be read with the intention with which it was drafted. And this is, I think, a very recent and very strong case, which is very useful for everyone who may be on this call. Coming to just the impact of classification. So business impact, of course, if you are charging a higher rate than required, you lose customers, you have a reputational loss. If you're charging a lower rate, you have an interest and penalty. If you're charging or availing an incorrect exemption, it will most probably bring down the entity to its knees. And if you've taken wrong classifications, it may deny MEIS, SEIS, FTP benefits, which you may not even know you are eligible for. So classification in itself is one of the most important activities, and wherever there are high value or ambiguous cases, the practical approach is to get a written expert opinion and draft a letter and inform your jurisdictional officer of the stand that you have taken. So these are my comments with respect to HSN and SAC classification topic. Coming to e-commerce, I think one of the most important things that one must keep in mind is the various acts which are applicable to the e-commerce industry. So you have income tax, you have company law, GST, you have consumer protection, you have information technology, you have FEMA, payments and settlements systems, Competition Act. So these are various acts which are applicable to one industry. So the amount of professional assistance that these entities require are immense. And I feel from a point of view of addressing students and the startup culture for e-commerce, which is growing, this is a very large area where we can try and get into our professionals in and make a name for ourselves, and of course earn good money. Another thing is once e-commerce and technology are growing, and we all know that that is the future, maybe courses like DISA, which is part of the CA courses available through the ICI, and even you have CISA and many other technology driven courses. I think those are the ways to go as and when you chart out your career. Coming to the other general aspect on students deliberation, I just wanted to acknowledge everyone staying beyond the allocated time and giving us this opportunity to speak, and would acknowledge Mangalore Sikasa, Gautam Paisar, for giving me this opportunity to speak and be a part of this session. Thank you, everyone.
Thank you, sir, for your valuable input. And thank you, Rachel and Dhatri, for a very profitable session on HSC, SAC codes, and GST on e-commerce transactions.